Mahalakshmi ma'am. Good morning, one and all. Balu, Hari Krishnan, Harish. Can you hear me? Can you hear me? Can you hear me? Yes. Hello. Hello. Tanush, Haripriya, Harish. See, I will start my lecture. First of all, I would like to thank HOD sir, Senthilkumar sir, and Geeta ma'am, Deputy Dean ma'am, and all our faculty members for giving me this opportunity. So let me start with the subject: management accounting, concepts, basics, and objectives, limitations, difference between financial accounting and management accounting. See, management accounting. What are the principles of management? Principles of management. Actually, principles of management. Yep. Yeah. Principles of management: planning, organizing, motivating. So these are the theory part. We'll say is a part of management. Management accounting is what? To know the value of the assets and liabilities, to motivate the investors, to plan the ratios. So these are the outline of management accounting. So few examples I have brought. Few examples I have brought from management accounting. Can you see my video? Ajay, Danush, Hari Krishnan, Hari Priya, Puja Lakshmi.
Yes, ma'am.
The examples, the examples I would like to quote here for management accounting. Ma'am, Pratibha, இதுல வீடியோ ஆன் ஆகல. டிசேபிள் பண்ணியிருக்காரு நினைக்கிறேன். வீடியோ சரவணன் சார் தான் ஜென்ரேட் பண்ணியிருக்காரு. மேம் நான் பேசுறது கேக்குதா மேம்? ஆனா இந்த வீடியோ இல்ல மேம். வீடியோ வீடியோ these are the examples of management accounting. The first example, the reported expenses of an operating department, such as an assembly department of an automobile parts of electronics company. Operating expenses. What are the operating expenses? First, must know. What are the operating expenses? See, listen, here it is given as operating department. What do you mean by operating department? Which takes care of the which takes care of the which takes care of the operating expenses. What do you mean by operating expenses? The expenses incurred for running a business. What are the other expenses? The expenses are classified into direct expenses and indirect expenses. Direct expenses are which appears on the debit side of the trading account. Profit and loss account, debit side, we call it as indirect expenses. Indirect expenses is also called as office expenses. Office expenses means what? The expenses incurred for running a business. Then what is direct expenses? Because here they have given as an operating department. Operating department which takes care of the operating expenses. Operating expenses. Operating expenses which takes care of the operating expenses. Operating expenses which appears in the debit side of profit and loss account, which is incurred for running the business. For example, salaries, electricity, insurance premium, these are the operating expenses. Okay, then cost of producing a product, cost of delivering a services. What is cost of delivering a services? Cost of delivering a services means transport expenses. Okay, cost of performing a an opportunity business process such as creating invoice. What is invoice? What do you mean by invoice? Invoice is a source document which shows the final price of the product. In the invoice, you can mention your discount. Okay, it is the final source document where the transaction will come to an end. The cost of servicing a customer, serving the customer, serving the consumer, we call that as a transaction charges. What do you mean by transaction charges? Like, for example, when you use this IMPS or what is IMPS? Immediate payment services. When you use IMPS, you pay IMPS or any other services like RTGS. What happens is for using the service, the customer is charged uh, charge around 10 rupees or 15 rupees. You call that as a IS, sorry. You call it as a transaction charges. So these are the management accounting information. That is for running a business, what are the expenses you incur? In that you find out whether the expenses are affordable or whether the expenses what reliable or really the expenses useful. For example, current ratio. Current ratio is current assets divided by current liabilities. What is the purpose is whether you find out whether assets are compatible with liabilities, because exceeding the assets you must not have liabilities. So you must find out that current assets, current assets, current assets divided by liabilities. So it should have a ratio. Okay, so we'll go to the next slide. Yes, the next slide. Next slide. Next slide is this. Difference between, here you will know difference between financial accounting and management accounting. Here you can see financial accounting data is being used by outsiders. Okay, whereas management accounting data is being used by the insiders, which means who are the insiders, or you can tell as a stakeholders, or you can tell the person who have invested in stock or purchased the stock, or the management or the people who are involved in your firm is a insiders. Whereas in management accounting, it is highly regulated. Highly, it has been regulated by the rules and regulations of the accounting. Whereas management accounting, you cannot have you. It's quite unregulated. And my financial accounting uses only historical data. What is historical data? Historical data means historical data, historical data which use past record meaning the event should have happened. For example, capital invest, cash account debit to capital, purchase account debit to cash, sales, cash account debit to sales. So these are the capital investor purchase and sales happen. Okay. Okay. Though event has completed. Next, the event has completed. Only you tell that is a historical data. Whereas management accounting is purely it involves future projections. What are future projections? Future present. What would be the ratio of assets and liabilities, or what would be the ratio of your what is that capital acquiring ratio, or what is your purchase value, or what is the going to be earnings per share. Have you heard EPS, earnings per share? What will be the value of a share? So these are all future projections. Okay. So this is the difference between this. Next slide is this. Next slide is this. These are the common terms which is very important in management accounting. The cost, opportunity cost, expenses, cost object, direct cost, indirect cost. So what do you mean by cost? Cost is what? What you spend for acquiring a property. What you spend for acquiring a property or generating a revenue. Acquiring a property is a capital gain, generating revenue is a revenue gain. So both are different in nature. That's a capital in nature. This is revenue in nature. Opportunity cost. Opportunity cost, which is being what you spend for acquiring a revenue, that is called as opportunity cost. And the expenses is what you spend. Cost subject, any item for which manager wants to measure a cost. Management wants to measure a cost. Direct cost directly related to a cost object. Indirect cost, a sacrifice of resources. Sacrifice of resources. So that is indirect cost. So this direct cost, indirect cost, both are different. Direct cost will appear in the debit side of the trading account, whereas indirect cost will appear in the indirect cost will appear in the debit side of profit and loss account. As I told, direct cost is only for converting raw materials into work in progress. Indirect cost, raw material, it is used for selling the finished product. Okay. We'll go to the next slide. Right. Here you can see the opportunity cost and how the cost has been classified. An opportunity cost is a sacrifice you make when you use the resources for one purpose instead of another. That is called as what? Opportunity cost. The what you sacrifice is the opportunity cost. Okay. Can you see the screen? Can you see the screen? Akash, Balu, Danush,
Yes,
Danush
ma'am.
Kumar.
Yes, ma'am.
Can you see the screen?
Yes, ma'am.
Dinesh V, Gokul Raj, Hari Krishnan, Hari Priya, Hemalata.
Yes, ma'am. See the screen, ma'am.
So these are the basic concepts, basic understanding of cost is very, very important. So this is how the cost is being what classified. One first is opportunity cost, second one is fixed, indirect. Yes. Here, when you sacrifice for acquiring any resource, for example, what is a resource? Resource is what? Through which you earn. Through which you earn is a resource. Okay. Through which you earn is a resource. That is called as a opportunity cost. Through which you earn is a resource, right? So that's opportunity cost. Opportunity cost is equal to, it's been clearly given, explicit cost plus implicit cost. Yeah. And this will not appear in the accounting records. Next, they've given for difference between variable, fixed, direct, indirect, prime, overhead. Yes. As you said, so now you must know the difference between fixed cost and variable cost. Now you said the difference between fixed cost and variable cost. Fixed cost, see only fixed, there are certain expenditure you need to incur even though there is no production. Even though there is no production, there are certain costs you will incur. Okay. Whereas there are certain costs you will incur only when there is a production. That's why it's called as a fixed cost and indirect cost. Prime cost, what is prime cost? Direct material, direct wages, direct labor. Direct material, direct wages, direct labor. When you add everything, it is a prime cost. So these are the costs. So next, for example, though there is a production, but there are certain costs which has to be paid until there are no production. For example, you pay your salaries to the employees, you pay rent, you pay your what? like you pay your electricity charges or what else you pay. There are these expenditure that has to be incurred even though there is no production. That is why it is called as a fixed cost. Next is your direct cost. Yes. Cost hierarchy or type of activities and other cost appear. So classification of cost, variable, fixed, direct, indirect, time, overhead. Okay, next slide. So these are the, like you can see, these are the management functions. These are the management functions. So can you see what should I do, how it can be done, and whether I'm getting it done, and how will I do it? Purely, when you see this, purely it involves future predictions. Purely it involves future prediction. Please see this slide. So this involves future prediction, planning for future, planning for future operational, Hari Krishnan, Artiban, Artiban Puja, Artiban Puja, Artiban, Karthikeyan, Dinesh Gopalraj,